We live in a fantasy world now. Reality has been destroyed.
This is the time that you really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisade's Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Vince Lanci. How are you today, Vince?
I'm good. Thanks for having me back, Tom. Good to see you.
Of course, always great to have you. And of course, you're the publisher of the Gold Fix Substack, and the former Twitter phenomenon. Now you're just a ghost of your former self.
That's right. Right.
It's I think an interesting spot to kind of start today's conversation is something that you and I were discussing before we hit record here today, and that's the abundance of information that the average person really has based around the metals now.
Yeah. What we were talking about is it started last night, and then I saw something today that made me go, my goodness, we're spoiled. By we, I'm meaning all of us. Okay, so 5 years ago, so I'm writing last night, and I'm writing up something on silver out of a Bank of America report, and I'm doing some analysis on it, and I'm not happy with it. I'm not happy with it. I'm like, and so you compare it to your other work, and you say, oh, this is subpar. I've got to do something. I got to make something. I got to explain myself better, and then you go back to work, and today you come in and you're on Twitter, and Zero Hedge puts out a post making a classic snarky comment that Business Insider is back to making their insightful comments, and the headline they quoted on their tweet was literally, this is like a Business Insider headline. Business Insider says AI has fired 2 people and replaced them with men so far. And it's like, what? First of all, they were Insider, and then they came back to Business Insider. I'm like, oh well. First of all, my first reaction is, oh, Business Insider, very businessy of you, thank you. And then the second thing I was like, my God, such crap. Business Insider, when it first started, was supposed to be some sort of alternative to Bloomberg, and they marketed themselves well back then. But I looked at that and I went. And I started to revisit my own writing. I went, and I'm being harsh on myself. And then, pulling out of my own, personal, conceit, I went, holy shit, these are the type of headlines we got in silver and gold 5 years ago. So gold is shiny. You should buy it, says Bank of America. And I'm like, I'm looking at it going, well, the research hasn't gotten that much better, because I used to see the research back then. It's the coverage of it. Why is that? And the answer, of course, is because the mainstream media, having no competition, is able to slowly dumb it down, lowest common denominator stuff, until it's at the point where, gold, buy, shiny, good now is the headline. And that's also the story with a couple of ads. And with all the phenomena, all the different things going on, decentralization, which is a key thing, fragmentation of the mainstream media. It's not even the mainstream media anymore; it's the legacy media. Anyway, I look at that and I go, wow, I'm really being too harsh on myself here. I could just put a headline out like that and get people, gold fires, gold unfair to women or something like that. Nothing against women, God forbid. I'm just saying, just make it something it's not. But yeah, I remember here, Tom. I remember this. There was such a dearth, a stranglehold on gold information, because it is. Now, people are going to say, well, that's because no one cares about it. I'm going to say, no, because it is one of the most important assets in the world. It is becoming money again. It was demoted, demonetized, debased when I was on the floor, but I remember this is how hungry we were, right? At the time, Kitco would occasionally put up the first page of a report, and there was a report they had up about gold. Just surface stuff. But it was the most Xerox piece of paper on the floor that day. It's like, it's research on gold. And I would read it, and then I'd look up stuff online about it. I'm like, okay, what does this word mean? Parsing it. And now I'm like, you know what? such nonsense. Anyway, so gold information is still kept close to the chest, especially when it comes to with the whole BRICS alternative to the dollar stuff that's going on now. But I think finally you've always had talented people to talk about it, always. Mm-hmm. But now you have barriers in between those people and some part of the public being taken down. People like yourself, are a megaphone for good information. People like you, and then you're a megaphone for an audience, an investor group that is not just gold, right? For investors that are hungry for bona fide, authentic information. And because of people like you and Chris Marcus and other guys, you actually have I have a platform to go through, that you're a better intermediary than the mainstream media is. Now, 5 years from now, when you're doing advertisements for Depends or something like that, then we can complain to you that you stink. But for now, we're all quite happy with working with you. So yeah.
Well, that's excellent to hear. And we don't put ads on any of our stuff because we want to try to remain neutral within the space. YouTube actually changed their terms of service at one point, and they now have the ability to put whatever ad they want before our video. So that's out of our hands, unfortunately.
Right.
But, it comes back to this idea that, to me, when I started learning about this stuff, you make the great point that this is all precious metals info is stuff that's really held close to the chest that you don't necessarily want to tell everybody. Yeah. However, with the dearth of information we now have, it seems like there's a lot of misinformation or I hate to use those words, but there can be a lot of sensationalism in this industry as well. And that's something that I do my best to stay away from, because I don't think that necessarily helps anybody learn. It can help scare people, and I don't think that's the right reason to end up buying precious metals.
Yeah, it's two sides of the same coin, so to speak. When you have, and by the way, this is a comment on regulation, and meaning when you have an asset class that people want but isn't really regulated, and by that I mean gold's regulated, gold futures regulated, but you can't regulate the actual asset. It's an international commodity, it's money, depending on who you talk to, and because it's not regulated, it attracts two extremist liars. The first extremist is represented primarily by the interests that voice themselves through the legacy media. Gold is a pet rock. It sucks. It's a waste of time. And we're not going to discuss the history of it. It's the old days. We're progressive people now. And those people, just all they do is demonize. Then at the other end of the spectrum, which is people that you're alluding to, because it's not as closely regulated, you can say whatever you want, and I think the Bitcoin people are starting to finally figure this out, and that's why regulation in that respect is good. It's like gold is going up. You can't be an analyst and say Nvidia is going up. You can't do that. You get arrested. You get sued. The SEC will stomp on you. Well, gold, I think gold's going to infinity. Who's going to stop me from saying that? The gold people, they're going to stop me from saying that if I'm running a fund and even if I'm running a fund in the CFTC, they can let me say that, but as long as I don't, steal their money, it's okay. So non-regulated asset classes like gold, silver, Bitcoin, or underregulated, they have a Wild West feel to them. But the problem is the Wild West has been tamed forever in precious metals by the relentless pounding from mainstream media. And that's ending now because of platforms like this and, people such as yourself.
Well, I appreciate that. And, it's always a challenge to try to, bring those different views to the table. But it's an absolute privilege to be able to have some of your time, some of the time of everybody that I speak with, to be able to help educate people. You were kind of sharing with me as well a story before we started about your avatar and
Oh yeah,
kind of what that represents for you.
yeah. Yeah, the avatar is this little like 7-year-old kid or 5-year-old kid smoking a cigarette, and it's based on a real picture. And I was looking for like a meme picture of a chicken on the internet, and this kid with the cigarette in his mouth comes up. It's an old real picture. Comes up with his chicken, and he's got the cigarette, and the picture frightened me, and it frightened me, and I didn't know why at first. But the picture frightened me, and I was like, well, I was never a smoker. I'm not anti-smoking. It doesn't bother me. I had asthma. I'm like, what? Why is this? What is my issue here? And then, a couple beers later, and a little self-therapy, and I remember when I was 13, there was a kid who looked just like that who beat the crap out of me. And he was this little kid, and he was a smoker, and he was like 13. He was like, well, we're at the neighborhood carnival, and his name is to this day I know his name, Futso, the first real beating I ever got. And Futso didn't even really win, Futso, because he was so short. I mean, literally, these like street nicknames, and I got the best of him. Not that it was hard to, he was a little kid, but the moment that I backed off, 10 kids attacked me. So it was like an Irish Italian thing, like a Boston thing. Anyway, probably Montreal up your way on the east side. But I never forgot that kid. And when I saw that, I guess it's kind of like, not to say that I'm Batman, but I saw a bat. I was scared to death of it, and I made it my avatar. Yeah. I saw a little 3'2" kid who beat the crap out of me smoking, and I was like, okay, well that's who I am. Yeah, so that's
kind of shows what we're actually afraid of in real life.
Oh, there's so much Freudian shit going on here. I can't handle it anymore.
So Vince, kind of going back to this idea of the amount of information that everybody has access to, and especially through Goldfix, I commend you for putting out, tons of information here. I don't know how you do it all, but you sent out an email yesterday morning making note of the buying by the Asian bank traders out of Shanghai, buying silver and gold. So what were you looking at, and how does that translate into the price action that we saw yesterday, where, before the New York Open, we were really close to that $2,000 level again?
I'm glad you asked that, because the first part of that, people have been asking about, what is this based on? And, am I just making stories up? And the answer is no. And the second part, that is actually instrumental to what's going on right now in the market, very tactical. The first part is what are these opinions based on? And the opinion was, the observation was, I should say, was that Asia opened, it went, here's what we can see. Asia opened, it went up. Okay, right? Pronouncedly up. Consistent concurrently with a move in the yuan, and some banking changes that I had checked into, short-term banking changes. And then during the night, having seen that, I said, that's a good sign, right? That's Shanghai traders, which is like a euphemism for like they. Who are they? But it's not a euphemism. See, in China, this is part of my education. I worked closely with, by proxy, with the head of was before I was working at a fund. I was being educated. I had a relationship with a guy who was a great mentor, and I traded, almost 24 hours a day, primarily metals and oil. And I was an options market maker, so I was always on the market. And every time Asia opened, one day during 1 week during the year, it would just pop. And I was very Japanese focused at the time, watching the yen and gold and looking at correlations. And I talked to this commodity mentor and who's on desks, who's trading with these people literally. And I said, why does it blah, blah, blah go up? What's going on? I didn't see anything else. He goes, oh, that's China. And I go, what do you mean that's China? And he painted the picture for me 12 years ago. And now it has come in handy. The picture goes like this. China says China's China's banking is controlled by the state. So when the state changes policy, it implements policy through the banks, kind of like what we do, but they do it in a much heavier, more blunter way. So it's like, hey, we need to protect the yuan. You're not allowed to convert the yuan. Capital controls is the phrase. We need to protect the yuan. You're not allowed to convert the yuan into dollars. Hold on to your yuan. That's bearish for precious metals. Because it's not the only thing that affects precious metals, but that's bearish for precious metals in China because they're not taking their extra money, converting it to dollars and going out and buying silver and gold. They're not doing that. Like that's when everything was denominated in silver and gold. And so I was like, oh, and I used to just call it China banks. And some of the smarter CTA reports will refer to some of the smarter banks that have access to information in Asia. TD Ameritrade has a nice little CTA report, and it's not. And every so often they'll talk about Shanghai traders. Now, I don't necessarily agree with all their takes, but they're on top of what's going on. And they'll say, this Shanghai trader. I'm like, what the hell is a Shanghai trader? I know Chinese banks. What's a Shanghai trader? And so, I talked to someone who works with them, and he said, oh, Shanghai traders, those are the traders at banks that speculate based on the monetary policy that's being handed down from the central bank. And I went, oh, Chinese banks. And I went, okay, that's fine. That makes sense. So they kept talking. So I'm reading all this stuff all the time, digesting. I'm like, all right, so Shanghai traders is Chinese banks. Okay, fine. So China's buying. And by China, I mean smart China money, not necessarily perfect China money, but smart China money that's close to policy. And then during the night, it rotated through the US. And I went, and by the way, 2 days before, based on the information that I'm reading and connecting dots that may or may not be connectable, I went, oh, so right now it's China banks are long. I was looking at silver specifically, silver, and US CTAs are short. And when those two are in balance, they don't stay in balance for long. Mm-hmm. And when the Chinese banks win, that's because the US CTAs don't have the stamina. They can't, they run out of patience, or the Fed maybe does something to make silver rally because it's an economic metal. When the US CTAs, which frequently play short, especially in silver, when they win, that's because China changes their policy. And all of a sudden the Shanghai banks are like, okay, let's close it out, And so I was like, okay, well, who's going to blink first? And I thought it would be this time of year. I thought it would be the American CTAs, and I had a position on to that effect, but I wasn't expecting it to be as pronounced as it was. So just to run through what happened, you had big shorts in China, not huge shorts, big shorts in China, and you had big CTA shorts, not huge, but impulsive and very risk intolerant, right? So they buy in China. We rotate through. They bought a little bit in America, and then it goes back to Asian hours, and it popped again. And I went, oh, this is like my mentor Joe. It's like, oh, Chinese banks are buying. And I went, let's see what happens in the U.S. Meaning they should be buyers. And sure enough, they did buy. And this is all predicated on the whole buy season stuff. And that's what happened. So the story that I tell is based on experience, linking up with actual reports that are coming out now. So I'm making it up, but they're good stories.
Yeah. Well, I mean, it's all let's say information that you've gleaned through the years, and you're just trying to connect those dots the best you can, right?
Yeah. I'm a very the movie The Matrix, the Merovingian guy. I'm a very bad example of the Merovingian. It's all cause and effect, and I'm always asking why, and fortunately I had people that taught me, as well as a market that taught me when I was right and when I was wrong on the whole why part. Yeah.
So Vince, kind of sticking with that theme of these links west to east, are there signs that the GLD ETF has some type of connection to the COMEX that can be inferred based on the borrowing abnormalities that Bob Coleman originally pointed out?
So tightly worded. What did you say? No, I'm with you. Bob. Okay. Bob takes an approach to the financial side of the markets that I used to take. And that's not a negative. That's me saying he has the patience and discipline to look at the things that I used to look at all the time. And I no longer look at those as closely because of people like Bob that really know their shit there. Not to mention that I'm much more fascinated with right now with the way the world is changing. It's like, I don't care about the numbers as much. But what Bob really understands, among other things, right, is his financial acumen allows him to look at systems and through financial analysis, he can reverse engineer the plumbing. So he's made himself into quite a plumber, I think. So anyway, back to actually enough complimenting him. He knows he's good. What happened was he had made a comment. We're really recreating a trading desk here, meaning you, me, Bob, and people like that have something intelligent to say and aren't afraid to be wrong. Bob said, hey, I'm noticing that I won't get too wonky on it, but Bob notices that the ETF is hard to borrow. So if it's hard to borrow and you want to short the ETF, when I say ETF, I mean GLD on this one. You can't short it. It's hard to borrow. Therefore, the interest rate should be high. It's a very financial thing. And I was like, yeah, what's the big deal? Someone squeezing someone, fine, someone squeezing someone, but they never last long. This is me thinking as I'm reading, what's the big deal? And then he goes, but there's no demand to short it. And I went, wait a minute, that doesn't make sense. So it's kind of like a very weird mismatch. There's nothing available to short and nobody wants to short it. And I didn't know what that meant. That doesn't make sense to me. It's like nobody wants a haircut and there are no barbers. It doesn't make sense. Yeah. There's a supply-demand imbalance there, So I reached out to someone who knows, who's really a plumber extraordinaire in this area. And we're not mutuals, but I think we run different crowds, but we have similar overlap. And that person said to me, I don't know, and this person's very litigiously careful. I don't know that it's significant, but typically when there's a problem on this sort of a mismatch, it's because a custodial bank is trying to get their house in order. And all that means is financially, they didn't have their GLD shares organized to be, it's like an accounting problem. And so they just put everything on hold for a couple of days. Okay, guys, don't ask to borrow. We don't have any to lend. And that's the impression I got. And so I went, okay, that's kind of stupid. But I didn't say that, but I was like, it's kind of stupid. I never heard that before. But I know that these things are cartelled, especially these smaller markets. And then that same person, if they're listening, a couple days later, posts on their premium account, their newsletter, and this person is really very well connected, that they have confirmed, in fact, that China took delivery of some, quote, New York gold. And I went, well, New York, by the way, New York gold is COMEX gold. That's an old bullion way of saying COMEX gold, New York gold. And I went, all right, so I know why they took delivery of the gold. They're closing the ARB. Probably JP Morgan, another bank brokered it for them. This is only speculating, but I'm probably right. Another bank's brokered it for them. China can't just come in and take the gold, but an American bank, a bullion bank, can broker it for them. They can do the deal. They can make delivery. And I went. Somehow, this is related to the ETF. And I'm not going to pretend to know how, but I'm sure if I spent just an hour sitting down looking at it, I could come up with a couple probable pathways. But on that, just being Columbo about it, it's, if somebody wants the metal, I'll simplify it. I'm not saying this happened, but this is one way it could happen, right? GLD for some reason is using borrowed metal, and during that time, someone claims the metal, then the custodian of GLD has to go out and find more metal to satisfy the loan it's kind of like loans, right? The loan that's being recalled, and during that time, it's like, hey, nobody short GLD. I know I'm speaking fast, but that's how it's coming out, right? Nobody short GLD, hang on for a couple of days, let me go find the metal. And you can always find the metal in gold, always, because it's not used, right? You got to find someone who's willing to loan it. So you borrow the metal, you make delivery to China, then you figure out what's going on. And then the ETF goes back to being normal behavior. But so it's a little bit of a hiccup, only a hiccup. But that's typically how these sort of things work out. And what it told me was, I already knew this, but I never really saw anything empirically on it, was that the cause and effect was, when you're not allowing your ETF, I'm guessing, when you're not allowing your ETF to be shorted, and no one wants to short it because they already got the message to shut up. I'm speculating here, but it's, we make our money trading, not having opinions on this, but that the opinion goes with it. And then China does take delivery of 3,000 or 4,000 tons of gold out of New York because of the arb in China that's probably being arbed by Bank of America, JP Morgan, or some other smart entity that has a foot in both continents. Then you go, well, it's related, and I'm not the first person to say this. I'm not inventing it, but so my information comes from, again, experience, international experience. It comes from Bob noticing the ETF. It comes from this source that I have that confirmed that China was buying, and this source who also said, yeah, it may or may not have something to do with the ETF, but I can't say. So that's the whole thing. So long story short, people like Andrew Maguire, right? I don't watch his stuff too much anymore, but people like Andrew Maguire have been talking about that. When he talks about that stuff, he's right. He's right. The point is, there's no smoking gun, so Andrew's got to fill in a lot of blanks and tell you what could be happening. And he's right about that stuff. The point is, but when you don't have the actual data, you have to fill in the blanks, and there's a lot of gray, and I'll fill in my blanks more dryly. But he's right. There's a tie-in, and I know there's a tie-in going back to 2011. This theory I had was tested in 2011 when silver ran to $50. There was a problem on SLV, on the ETF, and it had to do with somebody using borrowed silver. This is going to be complicated, so I won't get into it because I can't even explain it well yet. It's very plumbing oriented, right? Somebody was using borrowed silver to satisfy SLV obligations, and that borrowed silver got called away because silver's trading $50. I think I'll loan my silver out, and so it created a problem. And incidentally, I learned about that from that source, that said there's an ETF problem. So it all just lines up. Anyway, so down the rabbit hole.
What did that problem end up looking like in the SLV?
Well, I learned about
how did it manifest?
Yeah. Oh God, I had that story. I had that story on Goldfix, and the author of that story, the plumbing story, the really in-depth plumbing story that you go over with a fine-tooth comb trying to figure it out. I don't really know. See, I learned about this afterwards, right? It's like 2012, 2013, but it kind of was like the accusations flew back then, and since then for years, that SLV's silver, right? This is actually easy to explain. The SLV has a custodian. That custodian is, we'll say it's JP Morgan, right? I think it is, right? JP Morgan takes care of it. They're the custodial person of the funds. Okay. And the allegations were the bank is borrowing silver to put into that's not true. They weren't doing that, right? SLV wasn't, JP Morgan wasn't using borrowed silver or loaning its silver out. Like that's not true as far as I know. What was probably true is when someone else the mechanics are really annoying, but when someone closes out an SLV position or opens it up, they have to put silver in. Well, so as far as the custodian, JP Morgan, is going, this is our silver now. Here's our silver. We have it. It's in our vault now. It's ours. What you don't know is that, and it's not a problem. SLV is solid. But what you don't know is the person who satisfied that silver may have borrowed to do it. And so that person's got another obligation. It's like, I guess in any other business, it would be called using a loan as equity. Right? I borrow silver from you, and then I give it to JP Morgan, custodial. That obligation is satisfied, and then silver runs up, and it's like, oh shit, I've got a short. So effectively, SLV is protected, which is the idea of the custodial bank. SLV is protected, and some poor schmuck is short playing the market, hoping that he doesn't have to borrow the silver from someone. That was what was going on back then, and it was probably exacerbated by the bullion banks knowing that. They ran it up. I know they ran it up, but they had fun doing that. I know a couple fund traders got killed.
So Vince, as we're kind of talking about these, how these different jurisdictions, how these different countries kind of all interconnect, how has the geopolitical turmoil in Israel affected the metals prices? Do we see a lot of let's say fear or speculative buying based around the beginning of the conflict? Yeah,
there is a nuanced explanation which I'm really exploring now. But the main explanation is this: when there's a Middle Eastern war, before I drill down on it, when there's a Middle Eastern war, there's a flight to safety. A flight to safety means oil because it's geopolitical, gold because it's geopolitical, silver because it'll attract gold in that environment, and it'll be the dollar. So people put their money in the dollar because the war is over here, not over there. So those three things happen, right? Once the war ends, gold craps out, oil craps out, and the dollar will weaken but not crap out. All right, that's what has happened forever in the Middle East. And so what people did not understand was well, first of all, when there's a geopolitical problem in the Middle East and it's a war, what oil people understand is that there's two types of wars in the Middle East. It's very geographic. If the war is going to threaten production, oil is going to go up. If the war is not going to threaten production, oil is not going to go up, or it goes up very briefly. And so the expression that Brent Kelly uses is if oil gets weaponized. So I'm Saudi Arabia. If there's a bomb going off next door to me, there doesn't have to be damage to my oil facility. I'm just going to shut everything off because I don't want risk if a bomb does go off there. I want to minimize catastrophe. Well, so whenever there's a Middle Eastern war, this is going back to 91. When I started as a floor clerk, whenever there's a Middle Eastern war, everything rallies: gold, dollar, oil, right? And then they look at it and they say, is anything oil blowing up yet? No. And then they start to sell oil and they start to sell gold. Because if there's no economic problem, then it's going to be not going to be as bad. And generally speaking, you can isolate it geographically like this. If it's Israel-based and it's local, they look at it as like, that's not oil-based, right? If it's anywhere else or Iran is involved shooting at Israel, then it becomes a risk to oil. And so that'll make the markets stay perky, especially oil. It's kind of like if there's a Middle Eastern war, historically, this is what's changed. This is what's changed for the better for gold. If Eastern war and you get bullish gold, buy oil. That's the axiom. Okay, because if oil comes off, gold ain't going to be up there. Now, flash forward to now, and you have a Middle Eastern war. I have a chart out there. You have a Middle Eastern war, right? Oil spikes, gold spikes. October 7th, oil spikes, gold spikes, and the dollar firms. Doesn't spike, but it firms. And then oil, and once they realize that in the short term, at least anyway, it's not an oil war, oil backs off, which is what you expect. And gold keeps rallying. Now, the conventional wisdom, which is probably right, the smart conventional wisdom, not the MSNBC conventional wisdom, but the smart conventional wisdom is going to say, well, that's because there is a problem, and this is turmoil, and this is geopolitical turmoil, but it's not oil yet, and so gold is bought. And I'll be like, you know what? I can't disagree with that, but there's something that makes me think that's not 100% true, and that is the dollar. The dollar didn't really rally. So now you have this war going on, right? You have gold rallying, oil dumping, the dollar coming off again, and gold just keeps rallying. And I'm like, what the hell's going on here? And my conclusion, which is not conventional, and I'm not hammering a table on it yet, is that you had a lot of pent up demand for gold. You have a lot of people that are willing to buy gold on a dip, probably central banks and Middle Eastern entities. And they said, well, shit, we're going to buy it anyway. Let's buy it now. And that's why the dollar didn't do as well historically as it does, right? Gold did rally. Gold continued rallying when oil came off. So geopolitically, the whole big picture with regards to gold is it doesn't matter what's going on in the world. People want to buy gold, and a war will accelerate the decision making on this. Kind of like during COVID, I'm thinking about moving. All right, I'm definitely moving now. That type of thing, Thinking about buying gold. I'm definitely buying gold now. And I think that's what's happened. Silver, just to briefly touch on silver tracked gold, but not as well as it should, and as you would think. And that's because in the U.S., the CTA started selling it again. They started selling it because they expect a recession. And when you play the metals market as a U.S. sophisticated investor, you say, I'm going to buy gold for the war hedge, and I'm going to sell silver to get the economic aspect of it. And that's it. That's what's going on. So gold and silver are in play now as geopolitical assets, much more than they were in the 90s.
So Vince, as you mentioned that these banks are probably going to be buying this, coming into the season anyway. Is there a certain seasonality to the metals markets that you have observed over your years here? Yeah.
You're referring to something that I euphemistically call buy season, and this is based on tax selling season. You'll hear. It's become a little bit of an old trait cliche, but people liquidate stocks going into the end of the year for tax losses, especially if they're taking profit in something else and they want to keep their tax bill to a minimum. And what you tend to see related to that is sometime between the middle of September and the end of November, you have people selling everything. There's other people doing other things, but absent important information, and gold and silver rarely have important information until this year. Usually it's just someone's buying it, someone's selling it. There's no geopolitical aspect to it. What you get is between September and November, you get relentless selling. Doesn't mean it has to go really low. It just means that every time it rallies, there's someone there to say, yeah, I'll sell some. Yeah, I'll sell some. And then in November, sometime between November 1st and say Thanksgiving, you enter like a corridor. It's like we don't know what we're doing yet. And then the banks, all banks, and then the RIAs and the investment firms start to release their 2024 allocations. The 2024 allocations, they start with, we think 80% of your portfolio should be in stocks, 15% should be in bonds, and 5% should be in commodities. Fine. Okay. Within commodities, we recommend a split of 2.5% gold, 2.5% oil, that type of stuff, right? And every year that gets adjusted. Money that's already in there is fighting for allocation. This year, now I'm talking about this year, right now. This year, it's we're not so sure about oil. This is what I saw. We're not so sure about oil, and the reports I'm looking at. Oil, we think is going to be volatile in a range. I don't know what that means. I guess it means sell strangles. But gold we like. Now, maybe it's a sales brochure to get you to invest, but I got to be honest with you, cynical people who look at these reports and say these reports are just banks trying to get you to hold their bags. They don't know what they're talking about. And by that, I mean, when these 2024 recommendations come out, which is what's going on right now, the bank's recommendations are based on their analysis and their feedback from their investors all year long. They're telling them what they already know. And by that, I mean, so what you're seeing this year, you're seeing this whole buy season thing where allocations come out. And between Thanksgiving and January 1st, people deploy new cash and shuffle around existing cash. Some out of oil, some into gold, some into Bitcoin. 2021 was a big year for Bitcoin. And we're in the middle of that right now. And I would say, if you were to look at the market today, oil dropped $4, rallied $4, And then I think it was down almost like $5 today. And it may not be down that much now, but it was down. And gold has been either up or slightly lower during this whole time frame. Like today, I think it's down like $7 or $8, but that's nothing considering gold. I mean, considering oil dropped $4. So gold is completely in the short term unlinked to geopolitics. It didn't drop when the Israeli war turned out to not be about oil. It's unlinked from the dollar. Who's looking at the dollar and gold anymore? I mean, they will again, but right now they're not. It's unlinked from bonds. When bonds went up, gold went up. When bonds went down, gold went up. It's unlinked from everything except itself. People are buying gold because they want the gold. And this time of year, this buy season that I euphemistically call it, is when they buy it most. So between now and the end of the year, there will be buying. Will it be higher from here, over the next month? I don't know. It's moved so much so soon. I'd be happy to see a little bit higher. But yeah, hope that helps.
So, Vince, something that you and I have discussed before is the kind of this evolution of the BRICS nations here. And despite the non-news adopting a gold-backed trading currency in August, are there more steps between the Eastern Bloc countries like China and Saudi Arabia, for example, signing a currency swap agreement? Absolutely.
There are. Yeah, that's we were talking about the media that likes to sensationalize stuff. The BRICS in August, it's going to be the end of the dollar. No, it's not. It's not. They can't just do it overnight. But to stay right to your question, the August meeting for the BRICS was extremely important for real for the following reason. They all got homework to do. When the meeting was over, I don't care who's 500 countries want to apply for the BRICS. I don't care. 500 people want to come into a nightclub. It doesn't mean that they stay. It's an application. I applied for some video game that I never got. I don't care about it. Anyway, back to the point. The point is everyone got homework, everyone, including China. And that homework was this: get your, I saw the paperwork. I'm paraphrasing. Get your individual houses in order, which means get ready to diversify your FX, buy gold if you have to. They didn't say that, but that's what they're saying. And we're soliciting ideas on the commodities you want included in our new BRICS currency, which isn't coming tomorrow. That was their homework. That was the homework China gave everyone. China and Russia also got homework. And their homework was get your financial platforms and agreements in order. And I went, that's really good. And so I talked with Bai Xiaojun, my buddy in mainland China, that we talk about silver and gold a lot, and he helps me on the China policy logistics. I said, what does that mean? What does that mean in terms of time? He goes, well, first of all, it means that next year is even more important. Next year, they're supposed to be coming back to the table with their houses in order. And between now and next year, China has to have its house in order. Now, the main thing, the most important thing that came out of BRICS, that's not a headline, but it's happening now. The most important thing that came out of BRICS was the BRICS members said to China, we need you to internationalize the yuan now. That's a big deal. It's a big deal because China, part of being a global reserve currency is being global, and that would mean internationalization. And China has been extremely reticent to open up their books for, I'm sure there's reasons that they shouldn't be doing it, with whatever's going on there. But they've been extremely reticent to open up their books and internationalize, to simplify, to internationalize the yuan. And if you internationalize the yuan from their point of view, it comes with big risks. And those risks are, if your float's too small, you can be manipulated, you can be cornered, your economy can be ruined from outside. And that's, they're very paranoid. I mean, every time they've opened up to the West, they've really gotten the shaft, over the last 500 years. So you can understand why they're reticent on that. But they can't have it both ways. So their reticence was overcome by the BRICS, who the rest of the BRICS were like, dude, no, you got to do this now. And I went, okay, so China got its marching orders from the BRICS. And so I stepped back and I watched. And since August, China has, as you alluded to, signed a swap deal with Russia. They've liberalized gold ownership, which means they've liberalized the yuan. That's another conversation. So they liberalized gold ownership. They've liberalized the yuan. They signed deals with Russia. They're doing all these things to internationalize the yuan. I think the most recent one is they've been doing this for a while, but they've made it public that they're loaning dollars to second and third tier countries that need dollars. And they're not demanding dollars back, which historically they'll make dollar balloons. They're loaning dollars and asking for yuan back. So they're creating international flows around their country. So you're going to give us yuan, we're going to make yuan here. So they're kind of creating a cycle. And the reason, I mean, this may seem like a lot of, wonky stuff, but it's extremely important. It shows that China is serious. This isn't a hobby. This isn't a headline. China was told by the rest of the BRICS, you need to internationalize. And China's like, okay, we'll do that.
And it
by the way,
shows that they're actually working on their homework.
Right. And the bigger thing, this comes from Bai, the bigger thing is that within China's domestic politics, right? People don't understand this in the West, but within China's domestic politics, the conservatives, the traditionalists are fiat. Okay, the progressives are gold. Okay, so to make it a little more meat on it, the traditionalists are not happy to internationalize the yuan, not happy to sell treasuries. They have a lot of their own money in it. These are the oligarchs. So they're like, let's not upset the boat. Then you got Xi, who's the progressive. He's a progressive. He's a liberal in China. He's saying, no, we can't trust the dollar anymore. We got to get rid of some of these treasuries. We got to bring gold on board, progressive gold, crazy in the West, but that's what's going on. So for years, Xi has been losing that battle with the traditionalists. Now they're older. Now they're retiring. Now they're dying. Now the U.S. has really made things really hard for itself, and Xi gets what he wants to do. Jinping, I should say. Calling him by his first name, it's like calling our president Joe, or what's his name? Margaret Trudeau? Your prime minister. I'm kidding, man. I'm kidding. So internally, it was a battle for a decade for him to get them to say, okay, we'll internationalize. So China's international. Like there was a meeting before the BRICS meeting in August. There was a meeting in May where they said, okay, we'll internationalize. So they were setting the table. This is all going to happen. It's happened. It's happening. It's happened, and it will continue to happen. The question is, how does it manifest in price, which is ultimately what we all are worried about and or concerned about, and that's not as easy to predict. But that's what's going on. Yeah. So internationalizing the yuan. So next year's your deadline. Next year, if you're a mature, responsible person who's getting your own house in order, next BRICS meeting next year should be fireworks. If it isn't fireworks, then the coalition's not working. It's kind of like an OPEC meeting that doesn't work, So that's it.
So there could be more homework that needs to be done or whatever before there are fireworks. Kind of.
Yeah. I mean, I got a little bit of indication from someone who knows. I had been making a big deal out of M-Trade, which is their platform. So in terms of more homework, I'm answering that. And I looked into it. It was a Zoltan Pozsar meme. And I'm like, okay, looked into it. And I'm like, okay, the structure is the banks are here. The Bank of International Settlements inserted themselves there, of course. Cleverly, that's what they did, which means JP Morgan's involved, which means all that. And I'm like, okay, fine. So conceptually, this is the right way to go. They're doing it right. They're serious. Okay, so here's the first bad news. The first bad news is they have nothing set up technologically. They don't know their ass from their elbow, apparently, in getting this set up, which says to me either they don't know what they're doing, and it's very possible. We're talking about payment chains, and that's a Western specialty. Or they do, and it's just not a priority right now. As it stands right now, I think they know what they're doing, and I'm not a fanboy of BRICS. I think they know what they're doing, and my reason, and they're not prioritizing it yet. And my reason for that is I've watched China's supply chain in precious metals over the last decade, and it's gone from the most mundane things to the most sophisticated things over 10 years. So they work their way up to the hard stuff. They're not just going to start and say, let's build a platform. They just go, what, let's get the agreements in place. They run a tight ship, and it's longer term. Now, I can't speak for the other BRICS, but next year is a big deal. If I hear them say, we've got everything in order but the platform, I'm bullish. If I hear them say, we've got nothing in order, well, you know what? I think it's a big problem. So that's where I stand on it.
So, Vince, what role does the IMF play in aiding or suggesting gold as a unit of international reserve here, too?
Aiding or suggesting? Well, they aid themselves by not suggesting it be an international reserve asset. No, you might be referring to a paper that they put out. I don't know when it was, March of last year. I'm not sure, but the IMF. Why don't we just start with the BIS, because that's easier for me to explain. The Bank of International Settlements is the broker for the G7's central banks. So if one central bank needs to buy gold or currency or anything else, they look for it in another bank. They keep it in what I would call an interdealer network. And that's what the BIS does. They're the banker for the banks. So they sit at the hub of this central bank thing. The BIS is the trading arm, the brokering arm of the IMF, right? So the IMF is about policy. And policy forever had been, in line with the neo-Keynesian model, had been gold bad, fiat good. And there are reasons for that. It worked for 50 years. And so what they would do is they would take gold, they would take gold from a country that had gold and no fiat, and then they would issue them fiat. So it's kind of like they were always getting long gold from countries, giving it to them, like Venezuela or something like that, give them fiat because you needed dollars to run your economy. So the gold's the collateral. So the IMF is long gold, and the BIS gets long gold, and they just allocate it to all these central banks, and they just start hitting it. Now, I mean, for right or wrong, that's what they were doing. However, and this is what's interesting, they never, it's a four-letter word. They don't talk about gold, at least publicly. Then when this whole China BRICS, buying gold thing started back as late as 2016, you start to see all these little networks pop up. China signs a deal with Russia, India signs a deal. It's like the oil-based yuan, blockchain gold for oil with Russia. You see all these little bilateral agreements. And then the IMF, and now the BRICS is a big thing now, and everyone's talking about it. And if you're the G7, you cannot, this is what it's all about. If you are the G7 and the BRICS are successful, you cannot afford to not have gold. Because if for some reason they have something that the G7 wants, and you're not on good terms with the whole mercantile world and the Cold War stuff going on, you need gold. They may take dollars, but they may also want gold. So that's where the war is. The war is you want our stuff, you need dollars. And they're like, you want our stuff, you need gold or golden yuan or whatever they come up with, So the West recognizes the importance of gold as a trading tool with the East. And they commission a paper that nobody really talks about, because these papers are they commission a paper that just says, hey, the meta headline is, hey, gold's really not that bad for international trade anymore. Maybe we should have some, and they do have some, right? That's basically what they're saying. And the reason these papers are important, even though they seem like they're just nonsense, is historically when a supranational institution like the IMF puts a paper out, I call it a tombstone. They're putting it out saying it's already a done deal. They're not putting it out because they're looking into it. They're putting it out after the fact. Listen, I'm going to give you $10. You know, I'm going to give you something. Write a story about it afterwards because you know what? We want to make sure that you need coverage, right? And what you're doing is when you're putting that article out there, you're saying to your other nations, it's okay. You can have some gold. There's a message there. And so when they put that paper out, and I researched the authors, and they did a couple other papers on the dollar and on the BRICS and stuff like that. I went, okay, so the West is getting its gold in order. Whoever needs to buy gold is buying it. Whoever doesn't need to buy gold is making sure they have it. We saw Germany getting its gold together back in 2017, right? I mean, as far back as that. So this has been on the books for a long time, and now it's just coming out. So now it's like, if China and the rest of the BRICS put a wall up and say, you can't have oil from that side, Europe is like, we got gold, right? I mean, that's how it works, right? So meanwhile, you're the BIS, you're the central banks in the West, you exist for your own benefit, not for the country's benefit. And you say, well, we're really good at this gold hedging stuff. We should get involved in that. And so they insert themselves in there. So that's where the IMF is an institution that, like any other institution, wants to survive. And if they're about money, and there's two types of money, well, if the dollar is vanilla, and whatever comes out of the East, let's call it the renminbi for now, is chocolate. Well, they better have some chocolate in inventory, and that means they're going to get involved, and the West is going to get involved. You need to own. It's in any business, right? If you're a car manufacturer and a new car comes along, you need to be aware of it and to be ready to adopt it, because you need to own your replacement. That's why Ford needs to do what Tesla's doing, whether you like it or not. But that's how it works. You need to be up on the trend.
On top of your competition.
Right, exactly. Mm-hmm. That's it. Yeah.
So, the way you phrase that, some of these big institutions exist for their own gratification in a way. You
right.
tweeted something the other day that was all about what you learned from all of this Argentina stuff, right? They just had a historic election, and they're supposed to be going through a dollarization. And I might have an interesting interview coming up about that pretty soon. But you tweeted that the WEF is absolutely, positively, and you don't use those words lightly, in line with China politics. Otherwise, none of this makes sense. So what do you mean by that, Vince? And
okay,
if you could walk us through that.
Yeah, no, that's okay. I admit I wasn't paying attention much to Malay, and I was out there trying to figure out what's going on, and you have this. So let's just say that most of my audience and most of my mutuals are politically right of center American. So some libertarians, just some conservatives, fiscal conservatives, some both. And I was like, okay, so this guy gets elected. Now I'm just looking at it like most people would say, oh, this guy gets elected. He's not liberal, therefore he's not WEF. I went, that makes sense. And then I read that he's pro-dollar, and I go, wait a minute, he's pro-dollar. And so I went, he's not WEF, he's pro-BRICS. I went, yeah, Argentina's going to be in the BRICS, aren't they? And I'm like, yeah. And then someone says, no. This guy doesn't want them to be in the BRICS. And I'm like, wait a minute. I went, okay. So now it gets kind of confusing. Now you've got Malay is just to try and boil it down. You got a guy who says he's anarcho-capitalist. He comes across, and his policies announced have been extremely libertarian, at least. He's anti-big government. He's anti-government at all, I think, at least in terms of what he's saying. I don't know what he's going to do. And he's perfect. He's perfect for the BRICS in the sense that he's a strong leader, autocrat mentality. He reminds me of an Eastern European country. He reminds me of one of those. I went, all right, this is like the right wing. This is the libertarian version of like a Putin. If you take, and I was like, put Malay in Russia, and him and Putin are having lunch. They're okay. Put Malay in WEF, and him and Klaus are going to have a fight. That's what I saw, and I didn't really get it. I'm like, so, and then I hear he's pro-dollar. I'm like, well, he's pro-dollar, and he's pro-Bitcoin. I'm like, wait a minute, this guy is like too many things. So I don't really know where I'm going with this, except to say, I don't say it lightly, right? And I'm not going to retract it. But what I'm going to say is, when you line up the calculus or calculations, however you want to look at it, and you see a guy who's pro-dollar for now, pro-Bitcoin in the future, anti-BRICS for now, but is also actually kind of friendly with WEF. I made this quantum leap, and I went, wait a minute. This guy's policies line up with China, but his monetary policy lines up with, at least stated monetary policy lines up with the US. Based on all this stuff, is this guy pro or anti 15-minute cities? That's like what I'm looking at. And if he's pro 15-minute cities, well, let me just boil it down to this. The WEF is all about the West reducing its economic footprint. Okay? China is all about increasing its economic footprint relative to the West. If this guy isn't with the BRICS, but he's liked by the WEF, I'm going out. Then China and WEF are, working together. And what I mean is it's a weird leap to make, and I can't really express it that well, except to say that if this guy is for real, then he's an individual, and if he's an individual, then he's a problem for the WEF and a problem for China. Therefore, WEF and China have the same interest with regards to him. That's it. That's. And I was like, wow, maybe Klaus and Jinping aren't talking, but they have the same goals. They have the same goals. And this all came about because I saw a Chinese 15-minute city being built. I'm not saying it's probably going to be a ghost town like everything else they've built lately. But I'm like going, okay, so they're all following the same policies. Klaus is saying you'll have nothing and you'll be happy, and they'll sell it to you. But China is saying to its people, you will I'm reading like one of their documents. You will be influenced to live there, or you will be forced to live there. I'm like, okay, it's the same thing. It's just they're just selling it differently. Anyway, that was a little bit convoluted, but I hope it helped a little bit.
Yeah, we're always just trying to, as we talked about earlier, piece these different puzzle pieces together and to try to figure out what's going on. Another individual that you've covered a lot in the past is Zoltan Pozsar. So Where is he now that he left Credit Suisse?
Oh, yeah. He started his own firm, consulting firm. The Latin translates to from many one. Yeah, the opposite of from one many. And he left. I'm sure he's doing great. Not that I would compare myself to him, but when he left Credit Suisse, he started his firm, and he's putting out 2 levels of high-end research, charging $30,000 a month, and I'm not going to subscribe to that. Not anti it, but he's got an audience for that, and that audience is going to be institutional firms. His research is covering 2 areas right now, as far as I know. One is the stuff that I like to write about that he talks about, big picture banking, and the other is the stuff that he's more traditionally known for in the banking area, and that is the plumbing of what's going on, stuff that you'll read on Zero Hedge, like the RRP. Zoltan understands that, FRAOIS. That's like Zoltan and Tyler should hang out and talk about that. That's like what they do. So he's got 2 levels of research coming out, and I've reached out to him a couple times. We've communicated once, and he was quite pleasant in his communication with me. Leads me to believe that, although he won't admit it, leads me to believe that he reads Goldfix. If not directly, he reads it because of all the time I get on Zero Hedge, and who doesn't read Zero Hedge now? and he basically said he doesn't want people to write about it. Implied doesn't want people to write about it because it's such a high-end product. So I expect, the funny thing is his work is still bearing fruit. It's still, talking about, like, one of the last things he did, and he did his little round the world tour before he started his company. He's leaving Credit Suisse. He's like, hi, I'm Zoltan Pozsar. I'm starting my own firm, which is all fine. But one of the things he talked about during that last stretch before he went underground again was the Treasury is going to be a problem. I mean, he said it. He said treasuries are going to be a problem, and the U.S. government needs to defend the Treasury, not the dollar, the Treasuries. So you defend the Treasuries, and when he said that, I looked it up, and you do all the reading, and the bottom line is, one of the things he said is still happening. It's happening now, and that is, the U.S. government needs to pull back its defenses of the 4 definitions of money, he calls it, which I think are just basically the extra pyramid, Perry Maryland's thing. And he goes, we're going to pull back. We're not going to defend stocks anymore. We're not going to defend derivatives anymore. We're going to defend bonds, because if you don't defend bonds, then your currency goes to zero. And I'm like, okay, I get that. So for them, the bottom of the pyramid is the pyramid is the dollar, the extra pyramid. And so he's looking at it that way. And I went, well, that means if they're going to let the dollar, if they're going to save bonds, then they're going to use yield curve control, which means they'll support the bond market and not let the yields get too high. And in doing so, they'll let the dollar go to zero so long as they don't lose their credit rating. And that's why I started getting very in-depth in my studying and writing on yield curve control. It was in conjunction with Pozsar's last public comments, which were long-term bond yields, or he basically said long-term bond yields must rise. And they did. And it's still playing out. So what he's doing now is he's probably doing his work, has major institutions as clients, and if he's listening, he should come on here and at least give me his archives so he can get some, so people can understand what he's talking about. Nobody understands what he's talking about except for Tyler and me and a couple other guys. So he's missed, but we'll survive.
And do you think that is because you guys take the time to really dig through and translate what he's talking about, because he speaks about it at such a high level?
Yeah, for me, the zero hedge, the Tylers, the more than one Tylers, that's a credit team. Tyler understands credit better than anyone. So he basically discovered Zoltan and brought him public 10 years ago. And I was reading him 10 years ago, and I was like, who cares about this crap? It's bonds. And about 2.5 years ago, he starts writing about commodity collateral. And I go, oh, now we're talking my language. So now I start reading him. Like, I was reading him before going, oh, I don't want to look up what these terms mean. This guy is a snob. He's over my head. I'm a dummy. Okay, I get it. Great, Zoltan, you're a genius. And then he starts talking commodities. So let's see if this guy knows what he's talking about. And I went, he does. Really, really is hard to understand for most people, but I kind of understand this stuff off the top of my head. And so I started writing on it. And that's it. I think it's kind of like, if I were working for him, or anybody who publishes his stuff, whether it's Twitter or me or Zero Hedge, they're doing him a service. His reputation is made by it. Otherwise, you'd be like, well, who's Zoltan? What kind of name is that? Like, that's what people will be saying, Americans anyway. But he's got a reputation in part because of the people that have taken interest in him. And anyway, it is because we take the time to read him. And I really think that if you think about it, over the years, Zero Hedge has been a one-man marketing team for him. When would you even know about him if it wasn't for them? He's got a cool name, Anyway, that's it.
Well, Vince, I appreciate you helping us piece a bunch of these items together. Do you think there's anything else you'd like to leave our audience with before we wrap up here?
Oh, yeah. There always is. I can always make something up. The question is, do they want to hear it? if you're long gold and you have been long gold for the last, say, 3-4 months or 1 or 2 months, consider lightening your load here, because as we go into January 1st, when this faucet of buying gets turned off, I want you to remember this. Part of the reason gold and silver have rallied is because the marketplace believes the Fed is going to ease next year. That's why we had that big spike in stocks, and gold tracked it and silver tracked it. And if the market is disappointed again, look out below. Now, gold will be a buy, but at what price? So I'm just saying, if you're long and you have some profits, consider taking profits in half to 2/3 of what you're long in right now, if it's a speculative position, because the Fed has disappointed in terms of their easing proclivities a lot lately. That's the only thing I'd like to add. Be careful.
Mm-hmm. Yeah, kind of counter to this buying momentum. That's something to watch for on the other end of it.
Absolutely. That advice is for me as much as it is for everyone else.
Yeah. Vince, I really appreciate the amount of material you put out. Of course, that's on the VBL Goldfix Substack. Excellent variation and quantity of material there. And of course, you're also available on Twitter at Sorenthek, right? SORENTHK.
Soren the K.
Soren. Okay.
Well, it was Soren Kierkegaard, but I was like, oh, whatever. I couldn't put all those. I don't know how to spell his name. But yeah, I appreciate that. And I have a coupon for you for your for Friends of Tom and Friends of Palisades for 30% off for life if anyone's interested. Otherwise, sign up for free and just see what you like.
Perfect.
Thank you.
Where do we have people go if they want to take advantage of that, Vince?
Oh, I'll give you the link. You can throw it in with the post.
Okay, perfect.
Right. I'll give you like a special coupon or something, and you can put it in there. It'll say Friends of Tom or something like that.
Okay, sounds good. Vince, thanks so much for your time today. Thanks for having me, man. I really appreciate it. Always a pleasure. This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.